Happy Monday, May 11th. Welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, and let's get into the week ahead on the markets. Before we get started, I want to apologize for not posting any new episodes over the past few days. I've been in the hospital due to a lung infection, and let me tell you, it hasn't been fun. I'm not 100% yet, but I'm back. And like always, today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more at amf-capital.de. Let's dive in. So, the big theme this week is the state of the American spender. We will get fresh inflation numbers, retail sales data, and earnings from several consumer-focused companies. And, well, all of that matters because investors are trying to figure out whether the consumer is still holding up or whether higher prices are finally starting to bite. The key report comes tomorrow, with the Consumer Price Index for April. Energy will probably be one of the most closely watched categories. In March, energy prices jumped by more than 20%. But interestingly, that did not really spill over into a broader price shock across the economy. Now, the reason energy is so important right now is clear. Oil, gas, and diesel prices have surged as the war has limited access to the Strait of Hormuz, a waterway that normally carries around 1/5 of the world's oil and gas supply. So, yeah, markets will be watching very closely to see whether that pressure is feeding into the broader inflation picture. So far, Americans have handled $4.50 gasoline better than many expected. In March, spending at gas stations rose by 15.5% compared with February, and consumers still had enough money left to support sales growth in several other retail categories. However, there are also signs that people are becoming more cautious. Personal spending slowed last quarter, and consumers spent more on cars and household equipment, possibly because they wanted to buy before expected price increases kick in. Still, not everyone is sounding the alarm. Executives from companies like Walmart and United Airlines have said that consumer spending is holding up better than the headlines suggest. Starbucks also reported its first quarter of income and earnings growth in 2 years. But of course, the picture is not equally strong everywhere. High gas prices and stagnant wages are putting pressure on lower-income consumers. And according to analysts, that may already be slowing growth at discount and dollar stores. Then, on Thursday, investors will get April retail sales data. That report should give us a better idea of how consumers actually behaved during the month. Clothing and miscellaneous stores were among the weaker areas last month, so earnings from companies like Under Armour, On Holding, Birkenstock, and Asics could offer fresh insight into that part of the market. And one more interesting name to watch is Klarna. The buy now, pay later company reports on Thursday as well, and since many Americans use Klarna for clothing and accessories, its numbers could say quite a bit about discretionary spending. So overall, this week is really about one question. Is the American consumer still resilient, or are higher prices, energy shocks, and stagnant wages finally starting to change behavior? All right, that's it for today's Capital Markets Quickie. If you found today's episode helpful, hit subscribe and stay in the loop. And if you want more insights, just add me on LinkedIn or Instagram, always happy to connect. See you tomorrow morning.